When the economic environment becomes uncertain, we provide the truth from a breadth of perspectives to help people make decisions. We not only compile and analyze the data that moves our ever-evolving economy, we carefully craft our own to provide clarity across industries, businesses, and employment markets. We identify unique opportunities to deliver asymmetric returns and focus on capturing value created during periods of higher volatility, transforming the financial landscape together. We're MacroEdge.
Good afternoon, everyone, and welcome to MacroEdge Radio, edition 32, where today we have a very special guest as we are attracting more and more diversified opinions to give you information about the economy, about the markets, and for everyone to learn something along the way. Today is one of those shows where some of us get geeked up for it because we have been involved in trading at some point in our lives. Me, not on the serious market level like our guests, but more of as a retail trader. But when you get to hear what he offers and listen to his methodology, there's a reason his nickname is Coach. And Dale Pinkert, I'll just read a quick bio that I found online about him because it works out perfect. Dale began his career in operations on the CME floor for Dean Witter. For those of you that are younger, that is an old brokerage that had a very well-established trading floor and was very respectable back in the day. He has worked in the CME, been on financial media numerous times, and he's called Coach because he's mentored retail and prop traders and helped a lot of people avoid the mistakes and pitfalls that you might run into in the markets. And I'm going to tell you right now, folks, this is a treat because a lot of his opinions might sound familiar. But what's more important is you will avoid making the mistakes. And the economy is one of those things that can trick people into making mistakes. You have to segregate what's going on. We'll do the market review after our guest departs later in the hour. In the meantime, Mr. Pinkert, or should I call you Coach or Dale, whatever you'd like, sir. Welcome aboard MacroEdge Radio. Oh, maybe Dale can't hear me. Okay, we'll stand by here. I know he's here, so we'll get Dale on here in just a second. There we go. Welcome aboard MacroEdge Radio, Dale. Oh, we seem to have the usual X spaces problems here. I don't know if he can hear me. I can hear him. I can hear myself, but I don't know about him. Okay, we'll sit there and keep trying to reconnect with him. He is set up as a speaker, so bear with us, folks. The technology has still not been fixed on this X spaces, as you heard last week, folks. And it's one of those strange things that happens. Dale, once you hear us, just let me know. We'll bring you right up and get you on the air with us. So real quick, in the markets today, it was one of those bizarre days in the markets. The Dow was down 65, rounding out. NASDAQ up 18, S&P down fractionally. Russell 2000 down 1848. Volume was nothing great, nothing special. Sort of a flattish Friday the 13th holiday kind of day. The big news of the day apparently was that a coin is outperforming much of the market, which is blowing my mind. I'm not big on the digital currency craze, as you might know. I'm still trying to figure out what practical use there is for it. And when one of them is called Fart Coin and is up 38% in one day and has a market value estimated around $650 million plus, you have to start asking questions, or are we in bubble territory? And once I get Dale up, we will sit there and answer that question, hopefully, because it's the most bizarre thing I've ever seen. When you have digital crypto NFTs and cryptocurrencies being created out of thin air by kids, by everyone else, and it suddenly skyrockets to these valuations, one has to start asking the question, is it a bubble? Dale, have you got me now? Frustrating. very frustrating. This is the biggest issue I have with this technology. He's got to clean this up. I think that X Spaces has the potential to become the talk radio replacement, but he's really got to start focusing and cleaning this up, especially in large scale broadcasts. We're going to bring Six into the conversation also because he's going to join us. He's our resident trader for the MacroEdge.net, Vision Fund, etc. Six, how are you doing this afternoon, sir?
Good. How you doing? I'm driving on the highway, so sorry if it's not the best audio, but
not a problem, sir. Not a problem.
How you doing, Dale? Big fan.
He's reconnecting because of the joys of X Spaces again.
Yes. Okay.
Yeah, it's a problem. You and I have been running onto this. Let's see if he can hear it. Let me get him back up online here. He's coming in, and now he's back on. Dale, can you hear us now? This is where it gets frustrating with our friends at X. He gets a great technology, but it's not quite got all the bugs worked out of it.
That's right.
Yeah, this has been an ongoing problem. This is not just for our particular feed gang. It goes on with everybody who hosts in X Spaces. Dale, can you hear me at all? I'm concerned because it seems to be clicking on and off. We have a tremendous reason for calling him Coach, as many people have. The nickname Six. If you listen to his videos, you listen to his conferences. I have not taken in part any of his courses. I don't know if you have, Six.
I have not. Okay.
From what I understand, it really drills down a lot of the information one needs to sit there and get a trading advantage personally and not make some of the mistakes that the rest of us engage in, including every mistake that retail investors are known to do. And it is a huge help in the commodity arena. And I don't want to throw this out here. I know he can hear me, so I'm hoping his speaker gets worked out or his microphone problems get worked out. The most bizarre thing about this is Warren Tracker sent a very interesting post out late in the afternoon. Have you ever heard of the ETF XCCC?
I haven't. I have not.
Okay. Well, basically, it's an ETF that tracks CCC rated bonds for near bankrupt companies. And it's outperforming the S&P since June. If that's not a flag to tell you there's an issue with the markets, that should be a red flag for everyone involved. Let's see if Dale, you there? Bloody. Okay, well, it is one of those strange things that happens with this particular technology, and I apologize to our listeners for that, and we're going to keep going. So when you have a ETF that tracks CCC rated bonds outperforming the S&P, is that a red flag in your book, Six?
For sure. I mean, it just goes to show like how tight credit spreads have gotten. They're at like secular lows. They've been lower than this just barely. Demand for credit is so high. I see it in my business as well as in the spreads. I mean, there's a lot of demand for any type of yield right now. Extraordinary demand, I would say.
And on the flip side of that, we're starting to see credit allocations to what would be considered subprime and lower rated customers at the consumer level not being granted as easily or permitted to proceed forward. That right there should be a hint that somewhere this is going to get normalized and the spreads will blow back out. And I think that is going to be the big red flag for 2025.
For sure. And I think the way that they're looking at it right now is that, I mean, you have delinquencies rising, yes. You have unemployment rising, yes. But they're taking it into account, rightly or wrongly, is that it's coming off of a low base. But I don't think they're factoring enough of the rate of change in, which is really the important metric to watch. They just look at the zoomed out chart of, oh, look, bankruptcies are low, unemployment's low, but they're not really taking the rate of change in. And I think that they're making a mistake there. I certainly would not. I feel like high yield at these spreads is like picking up pennies in front of a steamroller.
1,000% agree with that. And if you look at how quickly the markets can flip, gang, if you haven't been paying attention, one of the big for lack of a better term, market jihads that a lot of us, the MacroEdge team, have been on, has been the disinversion of the 10-2s and the 10-year 3-month spread. And today, the 10-year 3-month disinverted finally, and is now at a plus 0.07. Now, that doesn't seem like a large number, but the problem with that is that once it starts to move in one direction, it accelerates to higher levels and normalizes back to historical norms. This means there's a very large risk that the long bonds are going to blow out to higher yields, and the market is 100% unprepared for that. Dale, can you get on now? Bloody hell. Go ahead, Six.
Yeah, so I mean, I feel like what I'm looking at right now is that yields rise, economic data weakens, yields fall, economic data strengthens, it's like a oscillation that we keep seeing. And now that the last I checked, I had a meeting, so I haven't seen the close, but last I checked, 10s were at 10-year futures, at least, were at a yield of 4.4, up from 4.12 just a couple weeks ago. They're puking bonds again. They're finally starting to price in the. I can't tell you how many different the year ahead reports from all the different sell side firms that have for the last week or two, I don't know why bonds are not doing much better. They're about to cut rates. Have you any of them checked the SOFR spreads? I don't know, but I think we're setting up for another weaker period of data, whether it's a weaker period of data that continues in that direction. I'm not sure yet, especially with Trump coming into office, but these are all things that take into account.
Yeah, the precursors there. Dale, are you with us now, please? I cannot believe this. Seems like every time we get a fantastic guest or I'm trying to get on the air, X decides to take a puke, and it really is frustrating for everyone. And we apologize again. Send your emails to @Elon Musk. That's his username. Don't reference us. Just let him know, hey, man, fix X spaces. It is frustrating as hell, and we may have to move to another podcasting option if this continues. Dale, let's try this one more time. I know he can hear me, so that's what's really killing me. It's almost as if his microphone is just being muted. Six, I got a follow-up question on that because we're looking at the spreads. You were right, it's 440.03 on the 10-year. There's too many industries that are going to be caught flat-footed early next year, including the one that I'm involved in. Should rates get back up over the 475 level, which I can foresee easily, and I think it's the acceleration or rate of change that's going to hit people, not just the number itself, but if we suddenly jump up 50 basis points in the next 30 to 45 days, no one is ready for that.
Oh man, if that happens, the economic data is gonna turn down again like it did in July, for sure. I would say, well, not for sure, never for sure, but I would bet on it, and I will if that happens, big time.
Yeah, I'm also noticing that the Japanese yen is starting to deteriorate, and I use the Japanese yen as a standard for a safety trade. And what bothers me about that is it's creeping back towards 160, and now the BOJ is hinting that they're not going to increase rates. For some reason, I think they're going to have to increase rates, and that's going to be an additional rate shock in addition to some of the discussion that China and other nations that might be quote-unquote tariffed will avoid buying our long bonds and stick in the short side of the curve.
Yeah, I think what's going on with the yen is that, everybody's seems like they're betting on the BOJ bluffing here, but their data keeps surprising to the upside. Their PPI was 30 bips higher than they thought it was going to be earlier this week. I don't see how they I don't know. I guess I could see it, but I think that they will end up hiking again.
100% concur. Dale, can you hear me now, sir? It's so terrible when you have a great guest and you can't get that one question you want to ask. And believe me, I have several. We'll carry on the conversation with Six while we're waiting on this thing to work its bugs out. The bigger issue I'm seeing also along with that is that the Japanese are going to have to sell some U.S. instruments to pull off what they need to stabilize the yen. If we start trading in a band between 135 and 165, that's a disaster. What do you think, sir?
I really don't follow their economy closely enough to really make an informed decision there. But I like to pick extremes. Like if we get near 160 again, I'll take another large position in favor of the yen against the dollar. But like I don't live in Japan. I don't follow them as closely as maybe I should. But I watch mostly the U.S. markets. I like to trade the extremes. And when it's starting to get up there. I mean, what are we at? Like 153, 155 now? It's getting close.
Amen to that. Dale, let's try this again. Can you hear me now, sir? Oh, Lord. Well, this is what happens with modern technology. You cannot sit there and help it. It is just part of the new headaches that we're dealing with. Yeah, we're 153.65, by the way, as of a few minutes ago. So we had another nice jump in the pairing. And that's what's frustrating about dealing with that is you're watching this and you're thinking, well, it's a demographic death trap. You're hearing all of the economic fundamentals for why this is a problem for the nation of Japan in the future. Then you look at the United States and see we have similar problems here. From a macro perspective, they really have to crank it up. And I think that the death of Nissan Motors, which seems imminent according to all reports, including the shutting down production in Mexico to some degree for their luxury line to some degree, cutting it by half, is an indication that some of their major industrial powers are in huge trouble. Add that into the problems we have here domestically and a president coming into office who may want to engage in trade wars. I don't see a good outlook for Japan. Do you?
That's a tough one because they're picking up finally off of decades of stagnation, and to be honest with you, I'm not sure that. I mean, I know what I think is going to happen, but I'm actually really not sure that they should be hiking. They've had negative rates for a long time, but they haven't had the growth that we've had. Like their ZERP experience was very different than ours, and they got kind of a good thing going for the first time in a long time, and I'm not sure that they need to ruin that over a little bit higher the inflation than their target is when they've been so under target for so long. Now the U.S. on the other hand is a totally different story, but I think that they can nourish some growth over there at the expense of slight price instability. But who knows? I'm not on the boots on the ground.
Totally understand, sir. I'm just looking at the numbers myself, and I'm looking at it from the perspective of the and folks, let you know, Dale is trying to reconnect and retoggle his settings on his phone. That is the issue that we have to deal with. Everyone's phone is different. Apple is different from Droid. Desktop is different from the other versions. There's not one unified version for X Spaces you can use and make sure that it works correctly across all of the different platforms. It creates a lot of problems, as you've heard with the guests in the past, and this is just another indication of the growing pains that X has to get through. Hopefully he does keep a crew there of 6 or 7 people to work on that, because in the interim, it looks like all he cares about is launching things into space, and I have some nominees for that on one-way trips. Moving back to the economy, and the reason I was bringing Japan up, next week we're going to see another 25 basis point cut from the Federal Reserve. That's pretty much 99.9% priced into the market. Think about that, folks. We just got a hot PPI reading. We got a above normalized rate for CPI. There's no indication of inflation being tamed. Revisions were higher, and the bond market is starting to react to it in a normal fashion, as in the 10-year, the 5-year, everything else starting to accelerate in yield. Should this continue, I'm afraid we're going to see The housing market get caught again on the wrong side of the trade, as was discussed with Danielle last week and others, and Melody and everyone else. And also, the automotive industry is not prepared for this. The interest rates on new automotives will be blown away if we start seeing 5.5% handles on the 10-year. Credit card interest rates are already near all-time highs. You're going to see a crushing of the middle and lower class that you have not seen since the 70s and in the early 80s, when inflation took off after Volcker's cut in 1980. This could get really spicy, and it's setting up to be a bad welcome to the presidency for President Trump. He's not created any of these problems. Anything you see over next year economically is not a problem created by Donald Trump. Period. End of conversation. But what you will see is an acceleration or intensification of the problems if he chooses the wrong path. In the 1920s, we had Smoot-Hawley. Everyone thought that was a great idea to protect American industry. At the same time, we were starting to see liquidity issues at the fringe in our banking system and rampant speculation on Wall Street. That's why I brought that up. I remember watching the 1987 crash live myself, and that's why I was hoping to talk to our guests a little bit about this tonight. I watched it on the old Financial News Network with Ed Hart, Bill Griffith, and John Bollinger, all looking like somebody took their dog out and shot it right in front of them, because you have this shock whenever something happens that's outside the norm. And whenever you have a crash that's unexpected, because the currency gets too strong, interest rates get out of balance, the Fed appears unable to get it under control, it does create crises. And that's what we have to watch out for. The black swan, as it's called now. Six, do you think that, let's see if Dale, have you got us now? Oh, well, here we go. We got him back in, and it doesn't seem like he can hear us. Dale, can you hear me? Dale? Well, it seems like it's just Six tonight. Six, are you still there?
Here, buddy.
Oh, man, this is crazy. Well, I'm going to take a quick plug real quick. MacroEdge.net. Go there to sign up for the Ozone. Get our weekly updates. Get our stories during the week that are exclusive only on that through Ozone. Also, our sites, the real estate insights that we have with our team. New update coming up this weekend. Something else to consider subscribing to, folks. We're providing more data, more in-depth analysis, and more diversified analysis as we go forward. I apologize for my absence last week, by the way. When I sat there and I was assigned family duties and surprised by my wife with a quick trip, I missed the chance to talk to Daniel DiMartino Booth and mail her my book copy of Fed Up to get it signed. That's life in the big city. Six, do you think the market action is getting a little loose and crazy right now?
Oh man, it's frothy as hell. Yeah, we've had some crazy discussions about this. They are very, very, very excited right now. A little over their skis, but then again, they buy the dips. The 60.53 level on ES, where it topped after that insane rally right after the election was concluded, looks like a major pivot point. I mean, if they hold that, it could go up much, much higher, I think. I'm pretty bullish right now on stocks, to be honest with you. But yeah, it's getting nuts. The valuations are insane, but you can't time with that, because they could go crazier. Like, if you look at the price to sales, we're nearing an all-time high, but that dislocation could continue, especially if they're super excited about Trump loosening regulation, which they definitely are.
100%. And I'm noticing also that a lot of the speculation, not just because of Fart Coin and all this other bizarre crypto stuff. And don't, folks, I'm not anti-Bitcoin. I'm not pro-Bitcoin. I just haven't had a practical use for the digital currency's existence explained to me in a caveman-like fashion. The problem I see right now is, as it's trading wide and loose, we also are noting that we have younger individuals who are speculating on their phones, courtesy of Robinhood and other mobile apps, and engaging in trades that are way above their head, especially in the options market. And I see a trap door beginning to form, even for some veteran traders. When we start talking about 150,000 Bitcoin and 125,000 Bitcoin, and we start talking about 7,500 on the S&P 500, there's way too many people on that side of the ship for my taste. And I become more contrarian. Yes, I'm still the last bear standing now that Rosie's gone and a few other people. There's very few of us in that room right now. The bar's wide open. But I'm becoming more contrarian, analyzing what is occurring now compared to history. And if you look throughout history, you see this pattern, and people all make the mistake of crowding into the TV guys are right, the bloggers are right, the broadcasters are right, put all of your money, move your 401k, yet we still have, quote unquote, huge amounts of cash on the sidelines. Something doesn't fit. Agreed?
Yeah, for sure. What I'm thinking about when I think about this is that to really start getting like seriously bearish again, like I was in August, and I definitely held on to that bearish position for too long, but is not just a continuation of price going up, but an acceleration, and the upwards curve looking more parabolic than it has, and or weak economic data. If we get some more weak economic data, that's when I'll get very bearish again and express that with very bearish positions. But until we get that data, I just don't see any reason for the market to go down. Dollar liquidity is still very strong. Yields rising will definitely probably temper the rally, but maybe not until it, again, causes the data to inflect down. And until then, it just seems like it'll continue to grind higher until a catalyst really comes into the market, whether that is more excessive speculation or weakening fundamentals that are notable and observable.
I tend to lean towards your opinion on that, but I think the big black swan to speak in this particular aspect is February is notoriously a benchmark and revision month for the BLS, BEA, et cetera, et cetera. It would seem politically accurate to assume that they will sit there and throw the dead bird right into the middle of Trump's first month of being in office with revisions that paint a very bleak picture from the June through December time period, in my estimation, and may even validate the NBER forcing themselves to declare the recession started in April or May. I think it started in May. Some say it started in April. Some people said it started in June, July. I think that this revelation will be the black swan that catches equities totally on the wrong side of the trade. To be honest, I haven't looked at this in years, but there's some out of the money puts in the March, April, May expiration that are starting to look like lottery tickets at this point in time.
Yeah, I can see that. I have burned enough money buying puts that I see no reason to continue to carry them myself. But I mean, as soon as I see what I think, at least, hopefully I'm right, a change in the wind, I'll just sell futures, which I can do at any time of the day. And I change my mind constantly on what I'm going to do. So I can be bullish today and 200% net short on Monday.
Amen. Well, I'm going to give you my quick forecast, since Dale's trying to get his phone to work properly, and we apologize again to our listeners for this. If we cannot get him on today, we will try to bring him back on next week, if at all possible. What I'm seeing is we'll have some sort of Santa Claus rally next week. We have Hanukkah coming up on the 24th, the evening of the 24th through the first of the year. So I look for flat to just nothing trading occurring the final 2 weeks of the year. So whatever happens is something you can just sort of put a circle around, discount it, and do whatever you want. Remember, this is my opinion, not the opinion of MacroEdge Vision or any aspect of MacroEdge.net. And then when January rolls around, it's going to start getting a little juicy. And that's when we're going to start seeing the new alignments that we witnessed for every year-end reset, especially for people who are on the wrong side of the credit trade. That's where I think people are going to really get smoked, Six. And I'm scared about that because most people don't understand it's credit markets that can move equity markets in less than 2 or 3 days, not the other way around. Correct?
Yeah, that's absolutely correct. And I do like the idea of putting on a credit spread widener trade. I've talked about it before. The negative carry on it is pretty low, and the risk reward from these levels, while you do have the underlying deterioration, albeit from low levels, I mean it is an asymmetric trade. That's the kind of trades that I try to put on when I can, as long as I'm not just trading when I'm bored. I try to be as asymmetric as I can, and that is very asymmetric.
It's a juicy number, especially if we start seeing the 3 10s blow back out to 30 points, 30 basis points, and you start seeing moves in the twos tens back out to 0.5%. You're going to see massive moves in equities, not immediately, but in January, and that makes your steeper look even better.
Yeah, it does. For sure.
So, real quick, give everyone who listens an update on the Vision Fund and how, if they want to participate, they can do so through MacroEdge.net.
So we're relaunching it with a new interface in a week or two. So we're not currently trading it. We are resetting it in a way that it can be more easily monitored in real time instead of through updates and marking the positions to mark like we have been. It's just an inefficient way to do it the way we've been doing it, and it's not as transparent as I want it to be, and I want it to be nearly as observable as like an ETF that trades on the market. So we're working on that, and we'll have it soon.
Awesome. And that's what I wanted to get that update out there, folks. We are working on new projects throughout the MacroEdge.net team and new articles. Tonight, I'm going to put another article out for the team relating to the seasonal gold trade. We saw gold down $41 again today to $26.67, and silver down 68 cents to $30.93. I know people are not going to like to hear this, but this is seasonality trading at its best. It's to perfection. And if you look at the history of Decembers, and that's what we're going to focus on, throughout the 1979 to the current period, you will notice that volatility is in spades, especially in a year before major market moves occur. And when I say a major market move, credit and or equities or both. You'll find that to be historically accurate. The numbers are there. And if you look at the hard numbers, you'll also find out it's not there 100% of the time, but 90% is a pretty good track record. When precious metals are moving just like these speculative equities, one has to become concerned. We've heard enough from the markets to say, why aren't the miners moving? Why aren't there? There's not enough of demand for the largers, the Newmonts, to acquire the juniors. You're not going to see that happening right away. It's going to come. And when I think we see gold over $3,000 an ounce, which is going to be an ultimate destination and will possibly happen this year if we get any more geopolitical insanity, odds are that will create the kind of distortions in those particular markets that people are not prepared for. God forbid, though, something geopolitical happens. I mean, we had drones shot down in New Jersey. Last time we had UFOs shot down in New Jersey was in 1938, and that did not end well on the radio. Six, is there anything else you'd like to add to this? I apologize for not having Dale on with us. Well, hopefully we can get him hooked up for next week if you're available. Is there anything you'd like to add for market commentary? Because what we're witnessing right now is about the biggest speculative bubble since 99-2000, and in my book, 86-87. Old guys got to say that. That you'd like to add to this comment?
Surf the wave, just be nimble. I don't think shorting it is a good idea. I think you're just going to end up losing money. Like on a broad basis, like I'm constantly shorting it intraday, but just holding a large short position against this, especially if you're leveraged, is just it does the underlying factors to get a payout is not there. It's not very asymmetric. You're going to need a change in the underlying structure for that to work. You're going to need, and just hoping it happens or thinking that things are fucked out of whack. That's not a real strategy, and that's not how you make money.
Yeah, and I think at this time, if you're new to this game and you're one of the young kids who are playing the options markets or whatever, you better have very powerful hedges, because 2 to 3% moves entering into a bear or uber bullish market is a very dangerous but realistic possibility. And this market has not seen a 5% intraday crash. That move in August scared the hell out of everyone. They were fortunate that it was an election period and the banks were engaged to sit there and bail everyone out. I'm just quick question, one more question, Six. Is it not smart to sit there and start looking at the safety trade as a hedge, especially VIX futures, since they're so cheap? And let's see if that works.
Oh yeah, absolutely. I mean, what's the VIX at right now? 13. That's a more interesting place to explore, but not as like a main dominant position, but that you can certainly find some value in the hedging markets right now here.
Amen.
For sure.
Amen. And I think that is where we're at. Let's see if I can get I think our speaker is back. Hold on a minute here. For Pete's sakes, Dale. I think Dale's here, and I'm waiting here for him to come back up. We also have another individual who's requested. That's Eladio. Let me see if I can bring him up for this conversation. Eladio Santiago, bear with me a minute, sir. I'm going to try and bring you into this conversation also. And we will try and get Dale back up. He's trying to get in here at this conversation. Hopefully that will work. This is the problem with live radio and our friends at X not having everything functioning like you thought it would. As Six said, though, this is definitely the time to have your hedges in place and be prepared. I really believe we're going to see violent moves after Christmas and after Hanukkah, which most individuals have not been prepared for in any level at all. Oh boy, this is crazy. Yeah, it's just not participating. Dale, I apologize if you can hear me, but this stupid software that he's devised, I think is designed to torture people who are geeks and are usually ready for it. I'm trying to answer these requests for people to join us, and for some reason it's not working. I love the part. That means you're a radio host. If you hear the part of these discussions, that means your average radio host, be it any of the big ones or anyone else, has no clue. Eladio, are you with us, sir?
I am. How are you all doing?
We are doing well, sir. Nice. Welcome aboard.
Very good. I love macro talk. It's like it's what I love doing. I'm a big picture guy, and I have the pleasure of working with a lot of nice, smart people, and we all participate in. A lot of us participate in the finance call in the morning on Mariano Falls, and it's a very stimulating discussion. But look. I think we have an all clear here. We're in a Santa Claus rally. Some speaker, I believe it was Six, said, or some other speaker said that it is obvious that the election has had a massive impact on the bullishness. The idea of a deregulatory environment ensuing that we haven't had for 4 years. The idea of an extension of taxes that makes us more competitive against China, because all that is a sort of, oddly enough, a tariff against China when you think about it. Because if our corporations have lower tax rates than the rest of the OECD, from a competitive standpoint, that means we have, more profit than they do. That's no different than when China lowers prices on steel, for instance, or aluminum to be below the ask price of the actual commodity. But right now, I think the problem is that we have a Fed that has abandoned the lower 80%. The top 20% are golden, and I've been there for a long time. And we have assets, and we keep accumulating assets. And the debasing of the dollar, which is what the Fed has been doing, ever since quantitative easing was implemented, is given risk assets. And what do I consider risk assets? MSTR would be a derivative of BTC. BTC would be a derivative of the QQQs. The QQQs would essentially be a derivative because they've hijacked the S&P 500. There's your market. You saw what Broadcom did. I know semis pretty well. It's the one that I did catch on the downside last quarter. But this AI trade is massive. Innovation is going to continue to outperform. The QQQs are taking over again. The Fed's going to lower rates for the wrong reasons to correct the imbalance of currencies that they have caused. I mean, for goodness sake, the ECB is lowering rates. And what do you think that's going to do to their euro? It's probably going to break parity against the US dollar. So I think we have a bull market. We got some tax selling on January 1st for deferment of taxes for another 15 months. And by the time we get to the April first quarter earnings, we're going to see even companies like a Broadcom, maybe show some signs of weakening on earnings because of this correlation between currencies and their inability, these multinational tech companies to sell as effectively when the currencies of Brazil, of the euro, and the yen have declined.
100% agree with you, Eladio. This is John, by the way. I also think that the first half of the year is going to be a little soft. The second half of the year is going to be bonkers. And I really can foresee new all-time highs by the end of next year because not just the AI trade, but we'll be able to sort out which of the semis, which of the AI companies are legitimate, which ones were posers, and how it's going to transform the economy. Right now, it's all bets are off, like you said. We'll have some tax selling in January. We'll have some distortions due to concerns about the economy that are going to be rearward looking. As you picked up on my theme that I wrote about last week at MacroEdge, the 80-20 recession, the 80% have been in a recession since last year, early this year. The 20%, we're going to be fine. And that's a sad statement to make. My concern is that there's going to be a lot of resistance to Trump initially. That's going to cause the market distortions to provide opportunities. And I think there are buying opportunities, especially, like you said, after April.
This is a bull market. You can't go against the United States of America. You can't bet against, you can't bet against America. And when the dollar is strengthening, and we've had debasement of the dollar, and what did Trump do? He threatened all of the BRIC currencies. You create your own currency, you're going to get your tariffs doubled, and your currencies are going to get cut in half. And there's a new sheriff in town. Whether you like him or not, he scares our enemies as much as he does our allies. It's not a bad thing. It's not a bad thing.
100% agree, and I believe that this is why having a correction, and I want everybody to listen to this to understand, having a correction is healthy. If we got even to a 20% correction and everybody screams bear market, it would be a healthy entry point to sort out the winners and losers and find those companies that are prepared for the future and those that are not. And there's going to be a whole new group of players coming forward. I think a lot of people are so stuck in the mire.
I agree with you. Here, let's go into some concrete ideas. For instance, I think that AI is going to move into the hyperscalers, and that you're going to have Meta, XAI, Microsoft with ChatGPT, and maybe Google's in the hunt. Maybe Apple's out of the hunt. They're done. They had to move from China to India. It's expensive. They now got competition from Huawei. They also have competition from Samsung. Google has some issues, but the hyperscalers are where the money's.
And it cut him off right in the perfect part. He is correct. The hyperscalers have the hundreds of millions and billions of dollars to invest in this, and hopefully he can come back up. Eladio is making some great points here. Six, do you want to jump in on this conversation?
Yeah, I'm ordering food in the store right now, but I mean, yeah, the hyperscalers are gonna lead on the way up and lead on the way down if we go down, just like they have been. The size of these companies and their diverse lines of business is just it's truly unreal. And now that Trump's going back into office and they have no antitrust sheriffs to rein him in, there's no doubt. It's insane.
It is. Eladio, are you still with us?
There he is. I am. Do you hear me?
Yes, we hear you fine now. And we were just following up on your theme when you blacked out, hit a cell tower somewhere. It was probably something Apple did.
Yeah, I couldn't hear. But let's. Again, I don't want to take over. I wanted to mention some AI themes, if with your permission.
Please go ahead, because I have some of my own. So please go for it, sir.
All right. So Thomas Siebel, a lieutenant of Larry Ellison from Oracle. They sold, I believe, to Thomas Siebel. Siebel Systems sold to Oracle. He's in charge of AI. I noticed a technical change in AI. Is it C3 AI? I believe that they're onto something. I don't know why. I just get the feeling that I like the technicals on the stock. That's as small as I'm going to get. I'm going to stick with the hyperscalers. Meta's my favorite AI play. Don't bet against Mark Zuckerberg. He's a chess player. So is Elon Musk. NVIDIA, until somebody proves otherwise, NVIDIA's the king. You got to stick with NVIDIA, buy the dips into next year. I don't even care. I think we're going to get a 10 to 20% correction, a 10% correction at the index level in March. That'll be an opportunity to add to NVIDIA, in my opinion. In longer term, I just think that the Palantir and the AI military trade is on full force. I think military applications for AI are going to be humongous. We're getting all this stuff with the drones. There's no question that we have a laser defense system of some sort, which is much more efficient and faster than any type of hypersonic type of defense system. But AI is at the lead in the forefront of this massive growth. And in the military, it is going to only get bigger. And it's likely that even some of the other semis that are exposed to AI will continue to do well in spite of their weakness since July. That's all I have to say for now.
We have some similar themes, because I think Palantir is a prime takeover candidate for one of the big boys, and I'm not going to say who yet, but I see a great future for companies with innovative software and hardware development unified that hyperscalers are going to take a look at. And like you said, with the antitrust blind eye now, it's an opportunity for companies that are large to mid-sized with original ideas and innovations to be acquired. And we're going to have to do it if we're going to get ahead in this world.
Agreed. Palantir is a force to be reckoned with. I could smell 100. I could just smell it. Sorry. Humans love round numbers. And honestly, this market's a lot easier to pick apart than it ever has been on the downside. When the 50-day moving average is, and if it's a second-tier stock, it'll hold. If it's a top-tier stock, that 50-day moving average won't break for anything. I don't even have to look at the fact. I doubt seriously that we've broken the 200-day moving average on any of these big tech companies. Any. And probably not even the 50. And look what Broadcom did. Tech is king. Innovation is king. If you're a value player and you've been trying to make money in energy, you've been wasting your time. I do think the midstream area of the business is going to benefit from greater traffic and more supply. I do think that LNG exports are going to increase. LNG is going to be fabulous investment. Cheniere Energy is the only publicly traded company, but there'll be others that are going to be coming down the pike. Europe can no longer rely on Russia for their energy, so that's a good thing for the United States of America. Drill, baby, drill, and we're going to see energy prices go down, and we're going to hopefully see a resurgence in nuclear energy, which is what our country needs.
Eladio, I'll let you go after this, but I'll throw two thoughts out to you. My big theme for 2025 is pipelines, because all this natural gas has got to go somewhere, and this country is dying for more natural gas-based pipelines to supply the energy until nuclear becomes more widespread, cheaper, and more efficient, especially since the Department of Energy has foobarred the approval process for construction for so many years. We've got Joseph
But you're
Middleton.
an intelligent person. You're an intelligent person. What is your first name, if you don't mind me, sir?
It's John. I go by a surname due to threats that we get online.
You're an intelligent person. That's okay. I got a 44 Magnum and a Colt 45 loaded at all times.
Same here, sir.
So
Same
I
here.
don't have any issues.
Yeah, I buy your theme 100%.
And they are all hollow points. So, all right. So let's get back to the real deal. The fact is, you can't compete against American capitalism. It's that simple. Look at Europe. I mean, Milton Friedman was so correct when they created the Eurozone currency. The Eurozone was an experiment, and all it did was water down Germany and help it helped Germany. It was the third World War attack, in my opinion. The third one was economically against the pigs. Portugal, Italy, Greece, Ireland, and Spain. And all that was happening is that the euro was subsidizing more purchases of BMWs, Audis, and Mercedes-Benz. There you go. And the natural mechanism of currencies, devaluation mechanism, when a currency declines in value, it increases their ability to export to countries that have a stronger economy. Therefore, you correct the imbalances. The euro was a failure from day one, and it has been. Milton Friedman was absolutely 100% correct. And then they added the Merkel socialist East German plan. That didn't work out too well, especially when it came to relying on an energy. So look, capitalism, it might be a little Potterville. Unfortunately, it isn't great for the lowest 20%. But it's going to float the most boats and get the 80% that we need up. It's what happened in 1979 with Ronald Reagan when he won, and I think we're going to see animal spirits hit. And I agree, long term, intermediate term, we're in bull markets, but we're going to have a hell of a correction in the spring, in my opinion.
Eladio, thank you for your time today, and stay in touch. I put a follow on you so we can communicate more in the future. Bruno, you are up next on MacroEdge Radio. What can we do for you, sir?
Thank you. Well, I don't know, but I could maybe do something for you. I can encourage people to consider some different thoughts with respect to the AI theme. Just like energy is moving to, let's say, the local level with nano reactors, SMRs, the big data center companies, the big tech so we've already talked about contracting for their own energy supplies just for one single data center or cluster of them, not plugging into the public grid. So too is AI moving to what's called edge AI, to the individual local device. And it's kind of, you can liken it to something like your seatbelt beeper going off. It's local to your car and your seatbelt. And that'll be, microwave, Internet of Things, that kind of stuff that we've heard about and didn't really take off yet. So with respect to finance, and this is where the big innovations are being made and where the big torque is going to be for investors, it's never the lumbering household giants that are well established that lead, or where the real opportunities were for investing in the future. That's why we're not talking on BlackBerry handsets. We're not talking about Intel chips, where we're not driving General Motors electric vehicles, etc. So there's a thing called cross-chain abstraction, which basically will be the catalyst, the pivot, the inflection point where stuff on chain actually becomes useful, not just a speculative circle jerk of fantasy to regular people, just like AI will, just like the internet did. There was a point where nobody could imagine why you would bother carrying a phone around. Um, there's a pivot point at some point, and it's nearing with on-chain stuff. And even for TradFi types that don't want to hear about anything on-chain, consider the disruption, the obliteration it'll do to something like the sports betting stocks, because that'll all be peer-to-peer. You won't need to go onto a portal and pay a cut to find somebody to take the other side of a bet or a trade. It'll be wide open to anybody who is online anywhere in the world using any currency or bank, and it will all be seamless. Basically the equivalent of when computers went to a graphic user interface, a GUI. Then you didn't have to program lines of code just to make a dot appear on the screen. You just touched an icon and away you went. And even your parents or grandparents could use it. So that's where this stuff's going. That's where the huge opportunities are. That's where the companies are going to be bought out at 10, 100, even 1,000x of their current valuations. And so I just wanted to put that on the table, since people have talked about that theme, but it seems everyone's always talking about, the big 4 or 5. And again, that's not where people are going to make the most money or see the most innovation. It just never is.
I appreciate your opinion, Bruno, and thank you for your input today, because there is somebody we've never heard of lurking in the background that's going to suddenly appear, and they're going to become the big banana really quick. And it will probably be the one company that fixes a lot of the flaws that we're witnessing in the LLMs at this time. Next up, Tommy, are you still there? I had him lined up. I guess he had to bail out on us. Folks, we're going to wrap this up. Hopefully next week, if we can't get Dale back for next week, we will probably have a MacroEdge Team year-end review and projections for 2025. We're hoping to have a special conversation on the 27th. A lot of us are going to be traveling. It's the holidays. We will try to set up the podcast we were going to do at Thanksgiving, if that works out. My travel schedule's over for the year, thank God, so we could probably do some special shows should that opportunity arise. We really have had a weird year, not just from a market and economy perspective, but from a personal perspective for all of us, to deal with job changes. Everyone's witnessed an absolute nightmare as far as their professions, whether it's we've heard of friends or family or other members being laid off, contracted, outsourced, insourced, etc. We're going to discuss everything, if we can, in the next week or two, plus also the economic outlook. Now, you've already heard a hint from mine, and my own is a very bearish, which I've been very bearish because of a lot of the fraud and BS we've seen from the economic numbers getting washed out once and for all in the first half of next year. I think it has to happen. And the best thing for Trump and his team to do is go in there, correct the record, put the real numbers out for everyone to see, and tell us how he's going to fix it with his team. This has to occur because right now a large portion of the investing community and overseas investors are all putting their money into stocks blindly, but they're also thinking, well, there's no way the U.S. government will sit there and let this collapse. Remember, he's going to be fighting against a bureaucracy, which has been sabotaging him for going on 8 years now, since 2016. There's no reason to believe that this bureaucracy is going to suddenly sit there, put their hands up in the air and surrender and go away. We need to have this reckoning. We need to have this come to Jesus moment where the economic data is cleaned up, presented factually, new methodology adapted to the 21st century, not the 1990s, is adopted and used. Believe it or not, one of the methods that's in the BLS, this is all survey data when you hear the unemployment report. It's not a real evaluation of how many people are paying payroll taxes or eligible for payroll taxes or filing 1099s. It's mind-boggling. Most individuals don't understand the lack of honesty within our own government and the data that's available that they can collect. It's why we look at all of the various data points at macroedge.net. By the way, go to Ozone for a 2-week free trial, macroedge.net. There's our shameless plug again. We will continue to bring you the guests that matter. And next year, we've already lined up several blockbuster interviews. We'll reveal them all upon confirmation. You will not believe some of the guests that are going to be joining us in January and February. We have lined up all the way through February some really cool people that you've seen on CNBC, seen on Bloomberg, heard on podcasts. It's going to be a very powerful lineup because this is going to be the most dynamic period in the next 6 to 8 months in American economic history, in my opinion. Probably since the early 1920s, potentially the late 1890s, as we went from the agrarian to industrial, and then from the agrarian to super industrialized revolution of those eras. We're now going to go from the high-tech era to the hyper-intelligence era. And I think that is going to be the key to analyze what's happening in America, what's happening with the economy, and hopefully we can get Coach on here to talk about this because his viewpoint is not crazy. He actually sat there, and I've listened to some of his recent interviews, has nailed a lot of the themes that a lot of us believe in. And there is an opportunity to make a lot of money if you pay attention to what, when, and where, and not just follow the garbage that's thrown out on the television every day. We're going to wrap this up early. Six, thanks for being our guest. Thanks, Eladio, also.
John,
Go ahead, sir.
hold on, John. Next week, I'd like to do a segment with everybody listening and everybody not listening. Your favorite trade for 2025 or the trade that you're most optimistic about right now, up or down, any asset class, any security. Come next week prepared to talk about it. Let's get some good ideas circulating.
Consider that done. You heard that, everybody. If you're a listener, you can follow us. If you can't get a hold of us through the MacroEdge X Spaces, because God knows what changes X Spaces technology might have next week, contact us through the show thread at MacroEdge, at MacroEdge RES. That is the X account for us. And you can go to the show thread for that also and ask those questions. As far as, and I'm with you, Six, I've got some ideas. We'll talk in private. But the reality is, you know, Six and I trade ideas all the time, so it gets pretty crazy when you hear the private chats. Believe me, if they did, we'd all be in trouble. But the reality is that there is a change coming to America, and it's not all bad. And I think it's short-term pain for long-term gain. For MacroEdge.net and the MacroEdge Radio Network, this is John Galt speaking. Good night now.